Hello traders, and welcome to another video review. Today is Thursday, January 18th, 2024. Let's find out what is going on the Forex economic calendar today. Let's just switch to the very important and medium important events for this review. So what do we have here is data from the Australia, full employment rate and unemployment rate. Most of this data are in line with the expectations, and the industrial production from the Japan. The industrial production data were released in line with the expectations, minus 0.9%. So the industrial production in Japan deteriorates even further. Please notice there is still World Economic Forum annual meeting in Davos is still taking place, right? 10:30 we got the Bank of England credit conditions survey. Then we have some remarks from the Swiss National Bank chairman Thomas Jordan. Then we have the publication of the monetary policy meeting minutes from the ECB. This is scheduled at 1:30 together with the FOMC member Bostic to give a speech. The key data for today will be released at 2:30 in form of the building permits, housing start, Philadelphia Fed manufacturing index, initial jobless claims, and then at 5 o'clock crude oil inventories. So as you can see, the New York session will be the most the busiest one. After this data are published, we still have the Atlanta Fed GDP now scheduled for release at 5:30 together with some speech from the FOMC member Bostic. And at the end of the day, we got the New Zealand PMI business index release at 10:30 together with the Fed balance sheet. So as you can see, the New York session is the most important one today. This is the one that we should pay attention to. Nevertheless, because we got some data from the Australia, let's find out we will find out what the Australian dollar is doing later on. I think that we should start our technical part with the euro dollar as usual. The most traded pair in the world has bounced from the hammer-like candle located on a low with 1.0845. So this is the intraday technical support. We bounce just above the technical resistance 1.0890. Then we've made a high at 1.0907. where the 50 periods moving average is, and as you can see, the market is right now getting a little bit lower, because it looks like this 4-hour candle is turning red. So the key level here has been tested, but the market looks like it's going to be rejected, and more downside will be played soon. And of course, the orange trend line has not been even touched just yet. If we apply our A, B, and C possible, let's say target, let's say pattern formation, and the possible target, let me just find out. Okay, we will use the Fibonacci extension. This is the wave A. Let's do it from the top of the wave B, and we should see straight on that this level here is located just above the 61% expansion. So let me just place a line here for you guys, so you know that this is a 61% expansion of the wave A. So this is it, and the black. All right, but the one we are looking at really is this one, is number one, and the number one is very close to the recent swing swing low. Nevertheless, let's just copy this line and apply this line lower if we still have the Fibonacci on 1.0734 is the 1-to-1, and 1.0837 is 61%. So pretty nice target for the bears for now. This one actually is again very close to horizontal support, and this support is located here around the level of 1.0829. That's the last important support before the swing low is eventually hit. One more level we can add and make a kind of a zone is located here, very close to the swing low, 1.0742. so right now there's a perfect zone for all of you guys in order to trade it. And one more zone, let me just do the horizontal line from the this is the yesterday's low. Okay, so the yesterday's low again is green line, and we got two very nice zones. So this is the first target zone, and that if there is no breakout to the upside, this is the second target zone for the base. It is so nice that I'm going to take my screenshot of this chart, so thank you very much. And now I said something about the Australian dollar, so let's just go to the Australian dollar chart. We talk about this Australian dollar chart just recently, as you can see, we hit this level that I've indicated before. This level was, of course, located here. That was the lows from the beginning of the December 2023, and we just hit this level again. So we hit it here, and we hit it 2 times even, right? So the bears are testing this level pretty much extensively. We bounced a little bit from the extremely oversold market conditions, right? But this bounce is not that great. There is not even like a 23% Fibonacci or something like this. We are below the level of 6,623, which is now technical resistance. Local, let's say a local intraday resistance is 6,561. Now this level here, as you can see, well, arrows are very handy today. This level here, that used to be a resistance, now will become, of course, the it was broken. It used to be support, now it become the resistance again, and it's a very nice level because it's been recognized by the market participants. So we got plenty of these levels here, and let me just remove unnecessary lines, and there you go. The chart is way cleaner right now. We can make some kind of a zone, 6,643, 6,623. So this is a 20 pip zone, which is the key zone for the bulls if they want to travel higher. We got our trend line here, as you can see. This trend line, let me just oh no, I think it's okay. There you go. It's something like that. And this trend line here will be will be acting as of course, the resistance, dynamic resistance for the bulls. They might want to bounce from the extremely oversold market conditions, but the bounce will be definitely very much limited. First technical, of course, the first level is 6,570, then 6,589, which is the moving average. Then there is 6,623, and then 6,643. So plenty of the technical resistance for the Australian dollar bulls. Let's see how they will cope with this. And I guess that we should take a look at the crude oil, because just recently we got this crude oil data, and as you can see in the background on the 4-hour chart, there is a downtrend, and now we got the period of the consolidation. So let's just take a look at this period of the consolidation. Here we got the technical support located at 67.71, of course. So that's the technical support. Let me just copy this line and show you the highs. Those highs are, of course, the local highs, horizontal highs. None of this actually matters, because this is the old data before the this very nice zone was made. So recent pin bar located with the top at 75.24 will act as a technical resistance, and the recent lows made here, 67.28, will act as a technical support. That's enough for our zone trading range trading levels. We can add one more level here because it will be something like a trend line. Let's see if it works. Yes, it works pretty well. Look at this. We got the trend line here, and the market recognized this trend line. Let's add one more. Okay, let's add one more line here from this top 76.13 towards this level here. So we got that kind of a situation on the crude oil, and now this might be some sort of the triangle, right? So we got a triangle, potential triangle pattern building inside of the range. That begs for a very, very substantial breakout. Local levels are 70.51, which is the support, and the local intraday resistance 73.56. And of course, any breakout above or below this local range, intraday range, would eventually be considered either bearish or bullish. It depends which level will be violated first. So this is the situation on the crude oil. It looks like we are waiting for the fundamental trigger to show the direction on the short-term time frame, because momentum-wise the bulls are in charge of the market right now, 58 points on the RSI. Nevertheless, as you can see, we are still inside of the potential triangle made inside of the trading range zone. So it looks like no one is actually in a charge right now for serious trend continuation. Inside of this range, of course, sometimes there are bears, sometimes there are bulls, sometimes there are bears. Now the bulls are in charge. Keep an eye on the levels, keep an eye on the market reaction on the levels, so you will know what will be the outcome of this situation here. It's very, very interesting, and remember, there is a downtrend on crude oil in the background. So long term trend on the crude oil is down, so maybe this trend needs to be maintained soon and continued. Okay, that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.